Here is your mortgage market update for the week of April 7th, 2025. Now, if you can take a break from all the tariff and stock market noise for a second, let's get to some facts. If not for tariffs, mortgage rates may have risen last week. Last week was jobs week, and overall, the labor market data was positive. On Friday, the Bureau of Labor Statistics reported that 228,000 jobs were created in March, which was much higher than the estimates of 140,000. If tariffs weren't implemented last week, we could be looking at the 10-year trading closer to 4.3% instead of 4.1%, where it currently sits. Labor data has historically been the biggest driver of mortgage rates lately, but last week, mortgage rates dropped despite the fact that the labor report was much, much stronger than expected. Wednesday's tariff announcements and China's response on Friday morning prompted widespread stock market sell-off, which forced bond yields to drop sharply. But it didn't last long. By midday Friday, rates were on the march higher. Today was no different. We saw a sharp increase in rates today, despite more of the stock sell-off we've been seeing since last week. The biggest pieces of data are our two inflation reports this week, CPI on Thursday and PPI on Friday. However, the true impact of tariffs on inflation won't be seen in the data for a few months, and that could make some dismiss the estimates that expect inflation to drop in the two reports this week. And as we've said before, we could be in for a lot more volatility this week, depending on the prevailing market sentiment related to tariffs and trade.